So if you own a flat in, say, Kensington, you might want to look away from your property apps for a moment.
Yeah,
Numbers coming out of inner London are, well, they're pretty brutal. We're seeing the fastest price drops since the global financial crisis
we are. But it's so important to see what's behind that headline.
because it's a little misleading, isn't it?
It is. This isn't some citywide crash. It's a classic case of divergence. And our mission for this deep dive is to unpack exactly that.
Right, to figure out why the most expensive postcodes are plummeting while other places are, well, still climbing.
Exactly.
I mean, the spread in the data is just wild when you break it down. Inner London as a whole down 4.6% year on year.
But that average number hides the real story.
It really does, because you look at those golden postcodes and it is a bloodbath. Kensington and Chelsea is down 16.3%.
And Westminster's not far behind, down 15.5%.
Yet at the same time, you go to outer London boroughs like Havering or Bromley, and they're actually growing by 5, maybe 6%.
It's a tale of two cities. It proves that the idea of a single London property market, it's dead.
So you really have two completely different ecosystems.
Totally. And they're operating on opposing rules. You match them together, and the average drop looks soft, maybe 1.2%, but that hides the drama.
Now, conventional wisdom would immediately point to mortgage rates.
Of course.
But prime central London is different. It's often a cash market, right? I think half of those deals don't even involve a bank. So interest rates can't be the main driver here.
Spot on. It's not the cost of borrowing, it's the anticipated cost of owning.
Mm-hmm.
The sources are really clear on this. The culprit wasn't rates.
It was uncertainty.
It was the speculation loop in the months leading up to the budget. The market was just paralyzed by fear.
The market hiatus. Everyone just froze, waiting to see what the tax bill would look like.
Precisely. And that uncertainty hit one specific group of people the hardest.
Not the families in Bromley.
No. The international crowd in Kensington. This is where those big changes to the non-dom tax regime really started to bite.
Okay, so let's just quickly unpack that.
Essentially, non-dom status was a huge perk. It let wealthy residents live in the UK without paying UK tax on their foreign income.
Right.
That status is being scrapped. And all of a sudden, London starts to look a lot less tax efficient for a global billionaire.
Especially compared to somewhere like Dubai or Monaco.
Exactly. So when you combine that with threats of higher stamp duty, that international capital just retreats.
And when it retreats, we're not just talking about lower offers. Liquidity just dries up.
Yes. There are literally no buyers at the table. You can't turn that £10 million mansion into cash because nobody's even picking up the phone.
And here's the kicker on the psychology of it all. The budget did eventually confirm a tax hike, a council tax surcharge on properties over £2 million.
Right. But, and this is the critical part, that tax doesn't even kick in until 2028.
So the market has priced in a future penalty today.
Markets are always forward-looking. That 16% drop we're seeing now is the market discounting the future cost of ownership years before the law even takes effect.
It just shows the fear of a policy can do more damage than the policy itself, at least initially.
Much faster, for sure.
Mm-hmm.
Meanwhile, the domestic market just seems completely immune to all this high-end panic.
Totally. Families in outer London are driven by schools, by jobs, not tax efficiency on foreign income.
And that's why if you look nationally, the divergence is even crazier. London is the only UK region where prices are falling right now.
That's an incredible statistic.
Look at the Northeast prices. They are up 6.8%.
Wow. So that's just a flight to value. People are being priced out of the South and are pushing north.
It's a huge structural shift. The regions are finally playing catch-up after decades of London's dominance. We're even seeing it in London rents.
They're cooling off too.
Yeah, rental growth is down to about 4%. We've basically hit an affordability ceiling. People simply cannot pay any more relative to their wages.
So the takeaway seems pretty clear. If you're listening and trying to figure out your next move, you cannot rely on national headlines.
Not at all.
Reading a chart that says UK house prices up is the wrong map if you're trying to value a flat in Chelsea. It has to be hyper-local.
Absolutely. And I'll leave you with one final thought on that. We've just discussed how the mere speculation, the anticipation of tax changes, caused a 16% crash this year.
Just the threat of it.
Just the threat. So the question is, if the fear of the tax did this much damage now, how will the market react when the long-term reality of that bill actually arrives in 2028?
That is the multi-million-pound question. Thanks for diving into the numbers with us. We'll see you on the next one.